Beijing may still have a trick up its sleeve or two when it comes to cracking down on financial risk. Sources say regulators are planning curbs on the trillion-dollar money market funds. We're looking at this with Bloomberg editor Emma O'Brien in Beijing. And Emma, what sort of restrictions are we looking at here?
The curbs, as you say, they're targeted at this money market fund industry, which has really grown over the past decade or so because of the high yields and returns that these products offer compared to sort of the rock bottom rates that are offered on bank deposits here. The curbs include a limit on same-day redemptions of 10,000 yuan. That's just over $1,500. These funds here in China, people are allowed to withdraw from them using payment apps like WeChat or Alipay to pay for everyday things, and the limits will apply to those withdrawals as well.
Right. So, Emma, we hear of new curbs and new restrictions almost day by day, right? So how does it fit into the wider risk crackdown that has been ongoing?
Yeah, you're right. I mean, 2018 has really got off with a bang in terms of this de-risking, de-leveraging drive. And this is yet more evidence that China is really intent on cracking down on this year, particularly the more sort of consumer-focused side of things. The regulators are very intent on making sure that everyday consumers, retail investors, aren't as exposed to some of these debt risks that they see in the system. Some of the things we've seen this year, the crackdown on using leverage in bond trading, a lot more curbs to do with entrusted loans. And of course, last week, we saw the seizure of Anbang. This is the insurer that used a lot of the sort of sales of products to mum and pop sort of investors here in China and life insurance products to fund its acquisitions offshore, and which now look to be having to be sold off as China takes control of the company. So they really are sort of ramping it up, and it is really a focus given that it's been given by President Xi as something of a priority over the past year.
Emma, does the timing have anything to do with China gearing up for this National People's Congress, or does it have everything to do with the NPC?
I don't know if it's particularly related, if it's been asked for example, ahead of this big legislative meeting, the meeting of more than 3,000 delegates from across China, from business, politics, descending on Beijing to discuss appointments, policy, all that sort of thing. Obviously, deleveraging will be a key focus, de-risking the economy, as I said, a key focus for President Xi. So there's likely to be policy, appointments and decisions made on that front. So this fits into that wider picture, and it's just another sort of chink in the chain as China moves to tackle that debt problem, more than twice the size of the economy.